Hey everyone, this is Ryan McKenna of McKenna Capital and Eng Tang of Tozy Capital. We're here to give you a Bitcoin mining market update and talk about the latest with our Bitcoin mining fund 4. Eng's been working very hard to finalize the deal with Generate Capital, and so he's going to dive more into the latest there. And also, I know 2022 was a very rough year, and we're going to be hearing from the source here as far as just the latest with Bitcoin mining and what to expect going forward. So, Eng, with that, I'll let you jump in and go through everything, and I'll ask some questions that we've received from investors, along the way pertaining to this latest update, and we'll let you just share your latest insights.
Thanks for having me, Ryan. I'm excited to share some hopefully good news for investors, but also to really provide what I believe are a realistic and pragmatic expectation, and then a historical look at what has happened in the market, and of course answer as many questions as possible. I also want to first apologize for anybody who've been communicating to us and our delays in responding. That's certainly a function of how much time we've been spending on getting these contracts sorted out. So with that, I first wanted to, before we get into the market update, I really want to say that the compute nerf situation was not great. It definitely delayed things significantly. But as of late last week, we signed the contract with Generate Capital, a variable rate contract, and we're working right now. Been working with the operations team to get everything energized and online, and they've committed by the second week of February. Hopefully it's sooner than that, but as soon as it is, we'll provide updates to that effect. So I want to get into what's been going on with the market and looking at this 1-year view. I'm happy to say, at the very least, the last month has been pretty good. A 39% increase in BTC price. I was not in a very good mental state at the end of the year, but yeah, this year is looking better, and I'm more optimistic. But of course, I'm very realistic and pragmatic, and but the last year has not been great in terms of Bitcoin price, down 37%. But the biggest challenge isn't really following the Bitcoin price. It's really understanding the price and difficulty trends. And I've been talking about difficulty more and more in hash price, and I want to really reinforce these definitions. Difficulty is a function of how much computational power is adding to the blockchain of Bitcoin. When you have a lot more competition or a lot more miners, your miner that generate the same amount of computational power creates less Bitcoin. When that Bitcoin goes down in value, you have less profits. That's what hash price looks like. And hash price has gone down dramatically, much more than Bitcoin price. And of course, the last month it's been better, but flipping between the last hash cycle, it's every around 2 weeks, every block, there's a new reset in difficulty, and that went up more than 10%. And there's a lot of theories of why Bitcoin difficulty continues to go up, especially over the past 4 to 5 months. The main theory is there's two combinations. One, a lot of the Ethereum merge had a cascading effect of these GPUs that are no longer profitable or generating any Ethereum, because Ethereum essentially moved from proof of work, which is using the machines, the Bitcoin mining or the GPU machines to generate Ethereum. Now they've switched them over to generating Bitcoin. The second is and more, the bigger impact is really that a lot of this has been planned out. It's just like oil production, similar to oil production, where even if oil price goes up, you don't really have the fast movement of like increase in productivity or vice versa, because these are large capital projects. We've seen it firsthand how long it takes to get a site online, and even all the promises, the vendors, the contractors, the data centers make us, whether it's April of last year being online, or June or July, and etc. And of course now finally, hopefully February. These things take time to even materialize at scale, and these plans have been made a year in advance when the economy and the economics of Bitcoin mining was different. And in late 2021, Q3, Q4 2021, a lot of capital flowed into Bitcoin mining because of the high profitability. And unfortunately, that generated future impact of more difficulty that will, I believe, will increase over the next 6 months still. I think it will level off. Very few companies are actually going into Bitcoin mining now, new companies, although existing companies and existing miners will be upgrading the fleet. So even if Bitcoin price stays where it's at now, Bitcoin miners will continue to upgrade the fleet because they have these big capex they've invested in data centers. These data centers, whether they're generating power at 5 cents or 6 cents, there's a value to them if you have a miner. And some of these have turned over their generation 2 miners, generation 3 miners into the newest generation miners. And so there will be some upgrade cycles, and that's reflected in sort of my forecast as well. So hash price is definitely an indicator I'm going to be following, and we have been following for a while, but will be very important because the new contract we've signed with Generate Capital is very much tied to hash price, and it looks very much like a profit share model, but I'll explain that in a bit. One of the things that has happened over the past year is industrial rate of power has gone up. And if you look at Texas, went up from $61 per megawatt, or essentially 6.1 cents. That's the equivalency here. Takes everything times 100 or 1,000, and to 7.2 cents. So power has gone up. Of course, Bitcoin miners don't really, or should not be really paying industrial rate power. They should be paying a significantly lower rate because they are consuming power right next to where the grid is. I mean, not where the grid is, where the production of power is, which is also where the Wolf Hollow Granbury site is, which is right next to a power plant. Actually, Constellation owns the power plant. So that's something that it's a negative trend as well. Generate Capital did not have a hedge on power. And I know their costs of operations and power, and they could not sustain the costs that Compute North had when Compute North went bankrupt. Mercuria, which is the counterparty and major investor, who held the hedge, the power hedge. They had a power hedge at 4 cents, I believe around 4 cents. That was withdrawn and removed. So I say all this because understanding the net dynamics of the true cost for a party like Generate Capital tells me how much they're willing to fight for our contract or not. And if fighting for the contract means they can't giving us what our original contract price is means that they're actually losing money. They'll probably put up a very significant fight. So this is sort of I think the most feasible commercial outcome, unfortunately for us.
Yeah, and Eng, one thing just to add to this, I know you and I have been talking about, we explored all options with the fixed rate, the variable rate, looking at other sites, and there's a lot of different factors involved. And I think one of the things, although Generate Capital has been hard regarding the new contract, we know that the old one was not profitable for them, but trying to eliminate some of the risk, if we were to try to move to a different site, I know we have a deposit that Generate Capital's recognizing, but also there's risk in that we've already had the number 1 and 2 hosting site providers file for Chapter 11 bankruptcy. We could move to another site, and all of a sudden we have that happen again. And I think one of the things you had mentioned that you feel very good about, Generate Capital, they've got a very strong balance sheet. So although they're kind of being a little bit tough on the terms, we feel like they're going to be around, and they're a good capital operator, and their balance sheet's very healthy, and feel like we shouldn't have any issues of having to try to look to relocate these miners. Is that kind of a fair statement to make?
Yes. Yeah. So over the past 5 months, while this has been happening, I have explored many options. One with Rhodium, one with Argo blockchain, one with TerraRoof, which was hosting Marathon, and a couple other sites that looked very appealing on paper. Upon further due diligence, the financial balance sheet of the companies wasn't very good, and in fact, Argo blockchain had to essentially sell the site, and I think they're facing their own significant financial difficulties. So expending further capital would pose significant risks. Migrating miners also impose significant risks, as well as significant resources and time. And I'm always wary of somebody telling me that they have great power and it's ready now. It seems like a full, I definitely have followed up with a lot of those options, but oftentimes that does not turn out to be the case. But yes, so Generate Capital is not a Bitcoin mining company, which is a good thing. That means that the balance sheet isn't just in Bitcoin mining and Bitcoin specifically or crypto. Their balance sheet is in a bunch of other assets, but they do want to make money on their return of capital. That's why they negotiate so fiercely on this. But they're not necessarily the operators as well. So while they're not necessarily, they're not necessarily the people we would be dealing with day to day, they're the owners. USBTC are the operators, and they have a good track record of operating their own sites, and I have a good personal relationship with their CEO.
And they're the ones that are also the site hosting provider for our New York miners, correct?
Yes.
So we've already had experience in Fund 4 with them, and that's obviously a good thing too.
Mm-hmm.
Great.
So this is the new contract, and this is gonna look like it's gonna be very expensive when our hash price goes up. And one thing that I want to highlight is the alternative would have been either market rate contract outside this at probably closer to 7.3 to 7.5 cents, or signing a fixed rate contract at 7.5 cents. The reason why this contract, in my mind, makes the most sense is it has the best downside protection. We don't necessarily have the most efficient miners. We're not going to spend additional capital to get the latest new gen miners, XPs, and they're much more expensive nowadays anyways. We went into this initially trying to get the best value, meaning the best bang for a buck. And at 40,000 Bitcoin, 50,000 Bitcoin, that made a lot of sense. It was sort of the best potential outcome for for all of us. And so the reason why we approach this contract and why we're and this contract makes the most sense to me is that it has sort of the best downside protection of all the options. And if, in fact, right now we're around 0.79 cents hash price, which would make us in the tier 2 hosting rate. And so we were actually paying around 6.5 cents essentially per kilowatt hour. And I have some models to show what break-even price would have to look like to get to the higher tiers as well. I want to highlight this spreadsheet as well, where these are like the tier buckets. We're in tier 2 right now, so we'll be paying 6.5 cents. Hash price is that. Tier 3 looks like that. Tier 4, tier 5, tier 6, 7. And when I say profit share, it's not truly a full profit share. And those are actually options out in the market right now where you could go and put miners in, you give a 50% profit share, and essentially share the risks. In this case, the profit share is a gradient. It doesn't, and I'm not really saying profit share. I'm not using the word profit share correctly, because when the profit goes up from this tier 2 hosting price to tier 3 hosting price, we would be paying an extra 0.5 cents per kilowatt hour. And that, but then we would actually be making, if you look at this spreadsheet, we would be making closer to, we would be making 0.5 cents extra, but then we'd be making up to 10 cents extra or 11 cents extra based on the M30 models. So a lot of numbers that actually, but a lot of numbers, but it's not like a flatline profit share. The profit share percentage, or the way that you conceptualize it, actually goes down as hash price goes up. So that's something that that we will have as well there. And I'm also working on potentially upgrading our fleet. The way that we would proceed with that kind of thing would be because we do have a 1226 Avalons in our other site in New York, and because they are facing a higher costs, and so they're trying to see if we would upgrade to S19s, reduce our costs, reduce our production, because obviously S19s are more valuable than the Avalons, and then potentially migrate to their Texas site. So we actually be centralized. So we're negotiating that right now. It's something that depends on how I feel about the market, and I'll look, would also provide some extra downside protection.
So Eng, in that scenario, you're saying we would trade up some older machines for newer machines. We'd have less machines, but more productivity with the newer machines. And so is it kind of like an equal trade, or how does that decision get made, as far as, like, obviously we would want to do it if it's going to benefit us, right? To get better returns or better downside protection, right?
Yeah. So it would be, the reason why we potentially can do it is because they would want us to do it, because their New York site is more expensive on a power cost. So they're facing some profit, and they own that site versus this site being generated. Still same operator.
Okay, great.
So more to come on that. That's something that I'm actively engaging in. So I want to show what a model looks like, and I want to also preface that this is saying difficulty is the same as today. Difficulty, as we know, for the past year has increased, and as of today, my calculation for difficulty growth for the next block cycle looks like it's going to be. It's going to look at probably a 2% increase. So so things don't stay the same all the time, of course. And but let's just assume that everything stays the same except for BTC price. I want to highlight two metrics. A monthly distribution. What does that monthly distribution look like for investors now? And then what does hosting price look like based on this new variable rate contract? So you can see that at today's $23,000 price, it's a little bit higher than that today, but to say $22,000, we would be 0.6% monthly distribution. Not great, of course. And our hosting price would be a tier 2, 6.5 cents. When it jumps to 30,000, you now double your distribution, which is better. But your hosting price is 7.5 cents. And this distribution takes into account this increased hosting price as well, made a variable rate model to try to calculate all this stuff. The $40,000 price would be another significant jump in monthly distribution, but also another significant jump in hosting price. And at that point, if Bitcoin's at 40,000 and we're paying 8.5 cents, we wouldn't necessarily be, I wouldn't necessarily be very happy, but it would be, it would be happier because we're making more money, of course. But then you might, man, I should have signed the 7.5 cents. So I feel like any decision we make would probably be a sense of regret. But I think, as to say, I think this is the best decision. The 50,000 price, you're getting 9 cents, 3.5 cents monthly distribution. Then 75,000, you're close to doubling that monthly distribution, but your host price jumps up as well to 11.11 cents, and then Bitcoin price jumps up to 100,000. If everything's the same, which is unlikely, because if Bitcoin price does go up, I'm sure there's going to be a lot more capital investments into Bitcoin mining. So this is this is a good illustration of how the pricing dynamics work, the hosting price work. It's not very realistic at all. But the hosting price would then cap at 11.5 cents, which is what our variable rate contract caps out at.
And one thing to just mention on the fixed rate option, we were looking at, we wouldn't be profitable, right, for several months, and that's obviously a big risk if Bitcoin went down in price or even stayed kind of where it's at. So I just wanted to highlight that just from talking with you, as far as just obviously that was considered, but we'd be basically setting ourselves up that we'd be entering a contract where we're losing money each month, and there was just too much risk there to kind of be tied to the price of Bitcoin that's out of our control. And we had to take kind of this variable rate, which gave us kind of the more flexibility, best of both worlds, better downside risk. Yes, we give up some of the upside, but it's not a true profit share where we're going to get incremental profitability each time Bitcoin goes up. So we are earning more. We just give up some, but it is capped at 11.5 cents.
Yeah, and one thing that I want to highlight is go back to this variable rate contract. If we had much more efficient miners, our miners would actually be making more money per hash price, and it would make a lot more sense to do the fixed rate contract. Our M30s and A12s to 46 aren't very efficient at relatively to these S19s, which means that you want to have as much downside protection as possible, because your break-even price is closer to, at today's price is 6.5 cents hosting, a break-even price is close to $18,000.
And one other thing, Eng, you mentioned, we're doing the modeling, that you're working off of the current difficulty, right? Where it's inverted from the last Bitcoin halving cycle, right? Where, if that wasn't the case, things would be much more profitable. And so we're kind of modeling off of I don't want to say worst case scenario, but current scenario. But there is a chance that it could revert back. Is that safe to say? And if so, then the numbers would be better, but we're kind of going off of where things are today and just expecting it to kind of stay where it's at, right, with maybe a slight increase. So I just wanted to kind of reiterate that and just, say again, is that kind of a fair statement?
Yeah.
We're kind of modeling worst case right now from what we see.
Yeah, we're modeling. Yeah, I'm using my last 2 months sort of as a framework, which is not necessarily, if you're living through Bitcoin the last 6 months, really, you're probably not very optimistic. I think we went all into this optimistically, and I still hold that long-term vision. And I hope everyone here does as well. One other note here is there is a halving event, and to help to serve to what happens every 4 years, and typically every 4 years, Bitcoin production drops by half. This is a part of the rule of Bitcoin, and we mine 19 million Bitcoin, and there'll be 2 million left to go. And it'll take another 120 years for Bitcoin mining to not have any more Bitcoin to be mined. So a lot of the Bitcoin has been mined already. And of course, every time Bitcoin price Bitcoin has been halved, in effect, you're making half as much Bitcoin. There's a lot of impacts to that for us. And part of that is we want to make sure that we mine as much as possible before the halving. So getting online as fast as possible, not having protracted legal battle, was very imperative. And then the expected halving is end of April or beginning of May of next year, 2024. So we have less than 15 months or 16 months of mining before the halving. In the model that I will be showing you, I'm not really highlighting a growth in Bitcoin price that takes account this halving, but it does take account the significant drop in production. Another thing about the halving that impacts us, and it's probably a good thing here, is how do you calculate hash price? Hash price is essentially how much Bitcoin do you make times the price of Bitcoin per machine. And when you have more difficulty, the hash price goes down because you're making less Bitcoin. When Bitcoin goes up, your hash price goes up because your same amount of Bitcoin goes, it has high value. So that drives hash price. In a halving event, when you're literally by the one day to next day, you drop your difficulty by half and the price stays the same. Now your hash price went down by half. So we could be in a world where we're paying 9 cents, 10 cents power, and then the halving comes around, we're dropping down back to 6.25 cents or 6.5 cents. So it does whiplash back and forth, and my team is going to be making sure that we pay the right amount. But that is that's something that I'm that's baked into my model as well as baked into my expectations, without really thinking about the upside of that, which is, say, usually before halving, historically it's gone up multiples X, usually around 10X per cycle. I don't expect that now, of course, but 2X gain would be pretty favorable.
Yeah, and with the halving, the reason, I guess, in theory, of the increase in the price of Bitcoin is because there's just less quantity out there, less supply, right? And that's why it was designed that way, to create more demand. And in theory, creating more demand should drive the price of Bitcoin higher, right?
Yeah.
Okay.
Okay, so I'm going to go to our last slide, 5-year projection. And this is really to just show you the inputs and variables. This 5-year projection, which counts on these year-end prices and an increase in difficulty. So this is modeling out an increase in difficulty, a 22% increase in difficulty for this first year. I believe that could be conservative, it could be optimistic. Obviously, the last 6 months difficulty has gone up way more than that, but a lot of that has been capital allocated already. A move to Bitcoin price of $40,000, I don't think would make a dramatic increase in the profitability for most miners. But you're looking at basically a much lower expectation than our initial forecast. And this model will basically be our break-even model. So if a lot of investors have asked, well, what is our path to break even? Well, it would mean that Bitcoin does go up, that we're mining a lot of Bitcoin now, that our average hosting price, which is stated here over the each year for is either above market or below market. And our mining, the halving does happen in end of April, beginning of May, which drops the total mined Bitcoin significantly. And yeah, so this is sort of the way that I've been looking at it. Of course, the price of Bitcoin could go up. Difficulty could stay more constant, although that's probably not as realistic. So those are some things that could be changing. I think the most realistic outcome is probably one where Bitcoin does go up significantly, but when does Bitcoin go up is also very important. If it goes up to 60K by the end of this year, and remember, we were thinking about 100K by the end of last, not last year, but 2021, and we were close to 670K. But of course, the market has changed, and if once equity markets go up, I think Bitcoin will rebound pretty quickly in unison. And of course, we've had a lot of issues in the crypto markets, FTX, Celsius. I know it has affected a lot of our investors personally. So it's very sad to hear, but has had a big impact in the overall market of crypto. And hopefully it's flushed out all the risks, but I'm sure there's some stuff that we're not necessarily considering. But it does seem that over the past few weeks we have hit the bottom, and that's why we've been up 40%. And this is sort of typical Bitcoin. It goes down a lot, goes up a lot. I think it's atypical for Bitcoin mining in terms of how significant the difficulty has gone up. And that's probably more a function of how cheap capital was and how abundant capital was in 2021. And of course, you look at growth tech stocks that have gone down by more than 95%. That sort of just highlights how abundant capital was when it was growing up so much in 2021 and then down to where it is now. So that's the presentation. I would love to open it to questions for investors. I know Ryan, you've collected a lot of questions, so happy to have the conversation.
Yeah, no, thanks, Eng. And I know you answered a bunch of them too throughout the presentation. And yeah, I'll go through and just see if there's any that haven't been addressed by you. And I know the last one was, you hit on the break-even point for Bitcoin. Essentially we're looking at a 5-year period now, right, with the current numbers and current modeling, and kind of being very, very conservative here. But your last slide was really kind of to showcase that, correct?
Yeah.
Okay. And another question that's come up, it's more administrative, but like as far as K1s this year for their investment, do you know about when those will be ready and what an investor could expect as far as from a depreciation loss perspective?
Yeah, great question. And that's been, besides these contracts and operations, that's been our major focus at Tozy. We're trying to issue thousands of K1s, it's a lot. And we're also trying to give all of our investors enough time to update their respective information. And so we're actually giving them to the end of the month to do so, because we don't want to do a redundant data transfer to our CPAs. So if you have any updates, you could share it in the portal or to me, Ryan or myself. My expectation is that we'll have our K1s done by mid-March, and our depreciation will be close to 93 to 95%.
Okay. So some great tax benefits here. I know, again, not off to the start that we wanted, but part of this investment came with some great tax benefits that we all get to take advantage of, for this upcoming tax year when we file for 2022. So yeah, that's good. I'm just trying to think of anything else that wasn't covered. I know you covered a lot regarding kind of tracking down all of our miners. Were we able to 100% account for everything at this point now? I know last there was maybe 1 or 2% that we were still trying to kind of corral with, with the site, but just wanted to follow up on that to kind of see if there was anything there.
Yeah, there's around 40 miners that we can't track down. That is the oddest thing because we have bill of sales and landings by the trucking companies or the serial numbers. We even have seen them on Compute North's roster, and they were misassigned or something. And so yeah, my team is going to be traveling to Compute North next week to do an audit of that. It's a very small percentage still. Obviously, any number is not great, but it's certainly that's something we're following up on.
Okay, and just in general, like when all of our miners are up and running, I mean, is it common to have a few percent or a few of them that are offline for whatever reason? Is that pretty standard in the industry, just given the number of miners we have and just how they run, where there's always a few that are down or need to be restarted?
Yeah. So in the model, I'm actually calculating a 96% uptime. So 4% of downtime, and that's based on curtailment, energy curtailment, right? By the way, even if we were online in January, February, December, there's significant curtailment, and what that means is power is just so high because of the very cold winters in Texas, and so it made a lot more sense for the hosting companies, data centers, to shut down because you weren't making that much Bitcoin anyway. So and Bitcoin price was very low, so we wouldn't have been producing anyways. So this model does account for that. I would expect 1 to 2% of impairment, and that's also in my model as well. That there's a degradation of 1% hash rate every month compounded, which I think is aggressive. So there's certainly areas where I'm being very conservative, that might not happen.
Okay. And in total now, with the rest of these miners coming online at the West Granbury, Texas site, how many miners will Fund 4 have mining Bitcoin now?
Close to 7,500.
Okay. So that'll be a big uptick from where we were before, where we just had, a smaller portion in New York, that was mining. So I think, this wasn't how we had planned this out, but we were dealt a very difficult hand indirectly, and we're making the most of a challenging situation. And I know you've been working really hard with all the different committees you've been on and trying to put this fund in the best place and put our miners in the best place, kind of move forward. So thank you for all that. I know it's been a lot of work, a lot of stress, and but here we are, and I know there's no guarantees in anything, but do you think the worst is behind us at this point? I know we've been through a lot. I mean, I want to be hopeful. I mean, I'm very hopeful on Bitcoin long term, but again, we just had some indirect setbacks through some vendor partners. But kind of where we are today, we got through a very difficult period where a lot didn't make it, and I feel like partly because we bought in cash, we didn't use any leverage. I mean, that really helped us. And we kind of navigated through, this chapter 11 as best we could. And here we are with a new contract, new terms, but I feel like, we've put a lot of the bad stuff behind us and we can move forward now. So I just was curious to get your thoughts on, just is the worst behind us? I know that something unexpected could come down the road, but I feel like we've weathered this storm as best we could, given what we were dealt.
Yeah. It was recently, it was Chinese or Lunar New Year. And there was like somebody was telling me or reading my signs or something. I'm not a big believer in that, but saying that, hey, this is going to be a great year for you. I was like, oh, really? This person also said that last year was not going to be a great year. So like, and I didn't listen to her before. So now like, wait, I should definitely listen to her.
Yeah.
I am more optimistic for sure. I definitely think that surviving, it was sort of the number one imperative. This contract allows us the best chance of survival without deploying additional capital. And I'm very much invested in this whole thing. Obviously, with my time and resources, I've been essentially paying all the legal bills, is counting up a little bit. So I'm actually very much excited for that to find out. Because I'm a big investor in this fund and these miners, and I'm hoping that we start getting on autopilot a little bit more. I think another month of 40% increase, right? Hey, another 300% increase, we're back to 60K.
Oh, that would be nice.
It has happened many times. I've seen it.
No, I know. And that's one thing, unfortunately, we don't have any control over. But, if you look at just the economy and where we're at, we've been through a lot. And yes, it could go down more. But I think we're, at the bottom or near the bottom. And we've made it this far. And hopefully we've got some good times ahead. And in many respects. And, we'll kind of see how this all plays out. But I really appreciate you putting this together. I know all the investors, happy to get an update and just wanted to hear the latest. And I know a lot has gone on behind the scenes, so it's good for you to share with everyone just what you've been doing and how some of these decisions were made and what to expect going forward. So thank you again for putting this together. And if there's any other questions, certainly reach out. We tried to cover everything that was asked in this presentation here. And certainly if there's anything further, reach out to Eng Ryan and we'll get you an answer.
Thanks for having me.
All right. Thank you.